Today I would like to talk about the stock market for 2022 and 2023. 2021 was a very good year for the markets. It was the first year following a new American president in Joe Biden, and as has always happened, apart from the first year under Jimmy Carter, stock markets in the US rose considerably in 21. That obviously has a reflection on the rest of the world, and overall most funds, especially those that were growth funds, performed very well in 2021. 2022, however, has not started well for growth funds. Nasdaq is down, American markets and other markets have been a bit rocky and very volatile to say the least. Sometimes though you need to look at statistics to understand what is happening. We do know that we've got the problem with Ukraine and Russia. We understand that we have the issues with inflation and potential interest rates. But one thing you do need to look at, and that has remained consistent, is that America and the American markets do dominate what happens in the rest of the world. And now we are in the second year of an American presidential term. And this is notoriously a year where funds and markets do not do so well in the first 3 quarters. It's historical, it's known, and I do expect the same to be this year. But what you do need to realise is that 2023 is the 3rd year of an American presidential cycle. And not since 1939 has the American stock market fallen in the 3rd year of an American cycle. Now, this means that on the basis of that, and these are stats that I've been very useful in the past, that we expect a very strong 2023. And what normally happens is the last 3 months of 2022 do tend to work well and to perform well on the back of what is expected in 2023. So why is it that the 3rd year of an American presidential cycle performs well? It's because the presidents in America do not want to do too much in 2023 in the 3rd year, because they're looking for re-elections, and markets like stability and they like the fact when nothing really much is happening. So this year you're seeing Biden trying to do a lot of things, and therefore the markets are not happy with the instability that comes across. They're being very aggressive on tapering in the money that's out in the market, and they're talking about being quite aggressive with interest rates to try and control the market, and therefore on that basis the markets have not reacted very well in the first month. In the last week of recording this video, the markets have started to stabilise and we've started to see a small bit of ticking upwards. But what I do believe is likely is the last quarter of 2022 and the year of 2023 will be decent, very decent returns for many of the funds. It's important, however, to be in the right types of investments and the right types of funds, but I do believe that we will see a good 2023. But you may have to ride the crest of a wave or ride the roller coaster during 2022.